Some really great questions came in from Anthony. He writes, I've been thinking lately about holding stocks through corrections. I think one thing I struggle with is the unknown of, is this going to be a normal correction versus the start of a new bear market? How do you handle this scenario, as when the bear market hits, likely the account would suffer a decent loss? I think that this is a fantastic question, and it's one that I would struggle with for a very long time, and I think that it's one that's on a lot of people's minds, especially given the current market environment. We kind of hit a major top in February, and the market's just been kind of chopping around sideways since. The first way that I deal with this is by having separate trading accounts. So I have a short-term swing trading account, an intermediate-term trading account, and a longer-term trading account. And so within each of these, it allows me to focus on one set of rules for each account. And so for my short-term swing trading account, I was able to see that move on the indexes where we were kind of just marching along higher and higher and higher, and there was a short-term uptrend that we were able to draw. And so as we started to break below that, and because the nature of the swing trading account is to take gains quickly, and the way that I was managing the positions in that portfolio were to take gains quickly and to get out quickly on the shorter term signals, I was able to get out relatively close to the top, just as we were starting to turn over, and move most of it to cash, and then even start testing the downside. So starting to go for ETFs like SQQQ, which is a triple short of the QQQ. Then on the intermediate term side, I'm focusing more on how the positions in my portfolio are behaving from the intermediate term perspective. So I'm looking mostly at weekly charts and moving stops up along the way. This is how we are managing the model portfolio in the Advanced Stock Report service. So because that intermediate term account needs to be intermediate term in nature, that means that we'll need to sit through some pretty nasty stuff. And what we've experienced since February through now, what's today? Today is March 21st, I'm recording this. So from then to now, it's been a slop fest. And that's one of the things that we need to learn how to deal with if we're going to trade on the intermediate term. We're never going to catch the exact top or the exact bottom. I think that that's where a lot of people end up getting tripped up. That, well, we don't want to lose, we want to try to maximize our returns, and in doing so, we end up chopping ourselves up, we end up getting out too soon, we end up getting out too late, and then we just end up sitting there and wondering what in the heck happened. We had this system, and we thought we were following the system, and the system didn't work. Well, we need to pay attention to which types of rules and which types of signals we're going to take. For an intermediate term, we are focusing more on weekly charts versus daily charts. Yes, we do pinpoint the exact entry point, and we initially set up the exact exit point. More so on the daily chart, we pinpoint those levels, and as we move our stops up, yes, we're still working with the daily chart, but we're more focused on the weekly chart and what it's doing. And that's how we're able to hold through some pretty nasty moves in Adobe, in Alibaba, in Caterpillar, in Intuitive Surgical, and in all these major winners that we've had, and in all those videos that I've showed you in the path to tripling the S&P 500. And if we weren't able to sit through those nasty moves, we wouldn't be able to hold on. And being able to hold on led to what's now a 100% gain in Adobe, about a 50% gain in Caterpillar, and so on. And it's just knowing the time frame that you're dealing with. And then when you're trading on the much longer term time frame, for me personally, I'm only looking at that once a month, and I'm looking at monthly charts. So I have a 403B. My day job is in healthcare, and it's a not-for-profit, so I have a 403B instead of a 401k. And it basically behaves like the S&P 500. I just get a basket of mutual funds and they all basically mirror the indexes to one degree or another. And so I'm managing that as I would be trading the S&P 500 on a monthly chart. And so looking at the correction that the S&P 500 had during February, it looked terrible on the short term. Intermediate term, not a whole lot better, right? But then on the monthly chart, if we're just checking in at the end of the month, well, we saw that it hit that 12-month moving average and rallied off of it. So not a whole lot to do in that case, and that's the reason why I didn't really blink when the S&P 500 took that nosedive and all the other indexes took that nosedive, because for that particular account, it's being managed on a much longer term basis. And yes, I'm accepting the risk that I'm not going to get out at the top, that I may end up suffering a 10% drawdown before I ultimately exit that, but it helps smooth out the move, and it's being traded and treated like it's supposed to be, which is of a much longer term nature. And it gives me a lot less stress to have to trade that longer term account like it's a shorter term account. I've tried that too. That did not work well at all. So we need to treat our portfolios well. We need to know what strategy we're using for each kind of portfolio that we're trading, and then just stick with that. And that's how we manage our risk for seeing these kinds of major drawdowns, and how we would know if how to operate if we're close to a top, or if we are seeing a bear market looming around the corner. It really depends on our time frame. That's what's going to dictate to us what we're going to do. So I hope that you found that very helpful. If you did, leave a comment down below. Let me know what you thought. Let me know how you personally handle these kinds of market conditions. I know that they're very choppy and that they could be scary for different people. And I know that there's a lot of different strategies out there. Help out the community. Help me out too. Leave some comments down below. Let us know what you're doing to manage your portfolio. Thank you all so much for watching. I truly appreciate it. If you like this video, click that thumbs up button. That's really going to help us out a lot. And also make sure that you subscribe to the channel so that way you get every single update. Thanks so much for watching, and I'll see you again in the next video. Take care and have a great day.